Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for May 10th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to see an upward trending market. For the most part, price continues to hold above the 2388.75s, our key level. We saw a little bit of a dip below there in overnight and pre-market trading here, both times being rejected and sitting just above it. Have a short-term downtrend in the day time frame right now, but overall, holding 88.75 is very important short term. Any failure to hold that level opens up a move back into 76.5, the next key level below. And again, that's an area that bulls really want to keep bid for a continuation or the potential continuation into new highs. Overall, this thing has been quite bullish. We've been holding at highs. This is the large key range that we've formed here from 2317.75 to 2388.75, midpoint at 53.25 here. And right now, the market is attempting to hold above the top of that range. And as we know, if there's any failure to hold above the top of this range, that could open up a move back against the range toward the mid and across the range. So this is very important as bulls attempt to keep prices bid here. There's still one more shot at 76.5 for bulls to defend. But those are the last two support levels here before this thing starts filling gaps and pushing back toward 53s. So continue to watch this area very closely on a swing basis. On an intraday basis right now, here it is. What you'll notice is here's the previous lows here right into 88.75. That area right there was held twice in overnight trading and rejected. But that was the low again yesterday, 88.75, just a very, very important level. You can see the downtrending market we've had here short term. So really it's going to take for price to reestablish back above 92, 93s in order for this thing to attempt to reclaim prices or retest prices between 99 and 2400. As I mentioned to our trading room here, we haven't seen really much acceptance above 98s. Every time price gets above 98, it's been rejected. We had a box form above it, and then we saw bears come in and defend it from below, and that led to the sell-off back to 88.75. So at the moment, short term, the bears have the upper hand, and keeping prices below 93s would suggest that we may see another attempt at push below 88.75. And below 88.75 has our 80.75 FOMC key level, followed by the 23.76 half. All right, let's take a look at crude oil. Here's a look at crude. Let's bring up the daily time frame. What you'll notice here with crude is that we've held for the last couple of days, and this is exactly what you would expect after a significant rejection day. So last Thursday, we saw a significant 2+ handle sell-off. Then we saw another major sell-off here, but by the morning, we had already recovered 2+ points and finished very, very strong, leaving behind a midpoint right at prior FOMC key levels and also off of the 50% S50 PivotBoss pivot. So that's the key level there. And this is where the absorption is happening, right off that zone. So at the moment, this is exactly what you would expect for bulls, looking to defend here and absorb off these levels and looking for a continuation higher. The next upside push would be 48.75 and as high as 50.20 on an upside basis here. So right now, this zone, very, very important. There's no law that says these bulls have to get paid. So we know who's positioned where. We know that bulls are positioned here, and we know that their stops are below 45s. So if there's any failure to hold 45s here, the stops get run, and we could see a double dip of this low. That still doesn't mean that we'll drop significantly lower. We know that between 42 and 43, there's a lot of support in that area. So right now, this is the key battle zone. This is where bulls are trying to keep bid and absorbed for a shot at pushing this thing higher. And at times it takes 2-3 days for that to play out before these stops unwind and a continuation is seen. So this is exactly what you would like to see on a swing basis if you're a swing bull. And if you look at the intraday time frame, you'll see what that trading range looks like. It looks like a very large trading range, wide-ranging trading range where this thing has been playing out. And the previous session, not a lot of great trading activity overall. We had one good sell-off here, an attempt to bounce, but it wasn't until price got below the previous session's low, 45.73, and failed to hold before that thing turned around. That was the key zone, was that 45.73, and now we're back above it. So this still remains the LVN here, so price could drop as low as these 45.70s yet again and still look to be bid. Now it's going to be above 45.50 where this thing starts to attempt to push to these highs, but right now we haven't seen a lot of great trading activity on an intraday and inside the range, so you have to look for the edges to defend. So again, down in the 45.70s is where bulls want to keep bid, perhaps even 45.50 as price tests the previous low. So that's the zone. Bulls really need to get this thing above 47s in order to really start a big squeeze ahead. Let's take a look at gold. Here's a look at gold futures. The previous session we had quite a move to the downside. We talked about how the previous session had a rejection off the highs here and 2 days ago. So that rejection off the highs suggested new lows. And we got that right away. That same day we got new lows. Actually, we pushed into this 1221s, came up, and the next day we got new lows as expected. Now we're holding on an inside day, and still the downtrend is intact. So if there's any push into 1230, that could be an opportunity for bears to trap and reject and look for a continuation downward. Remember, our idea was that given these 63s here and the failure to hold that level, we would see a move into 40 and perhaps as low as 1221. There could be an opportunity to trap, but that has been long since passed, and instead we have focused on a downward continuation into 1200 to 1205, and it would take reclaiming 1240 in order for this thing to change. So right now this is still a downward trending issue here for a likely continuation into 1200 to 1205. Looking at the intraday time frame, you'll notice that the previous session we had a target down into about 1213.30 in the trading room based off of this price structure that we had seen, and we got very close to it. We got to 1430. Once we got to that level, a big push up had occurred, and now you may see an impulse range may have occurred now. We have a very tight range that is played out here from 1221 to 1226. So short term, it's a fade the edges with a downward bias. So that's the current opportunity right now, is to look to fade this edge. So if price gets into 1226, look to fade it back down for a shot at breaking through support and into new lows. Bulls are trying to keep 1221 bid for a shot at pushing this thing back to value in the 1228 and perhaps challenging that 1230. But again, if we see 1230, it could be an opportunity to trap for bears and push this thing back down, especially given the fact that R3 is sitting right at that area. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.